we're still seeing a little bit of a gap, between pricing, in terms of what a seller expects to get versus what a buyer is expecting to pay. There's still a little bit of a gap, but I think that gap is decreasing as time goes on. A lot of the sellers are starting to realize that, the pricing I could have gotten in 2021 is not reality anymore.
Right.
So I need to reset my expectation and, take into account the current environment and the current risk that, buyers can take on.
Your network is your net worth. Come listen to some of the most successful people I know share invaluable knowledge, stories, and advice in real estate, business, and beyond. This is Weiss Advice. Whether you want to take your business or personal life to the next level, look no further. Welcome back to another episode of Weiss Advice. I am your host, Yona Weiss, excited to be here today with the one and only Juan Vargas. I say one and only in my world, at least. I'm sure there's thousands more Juans out there where you come from, but it's a pleasure to have you. It's so great to finally have you on the show.
Hey, appreciate the excitement, man. I love the intro. It's awesome. Yeah, and you're right. I mean, there's probably a million Juan Vargases out there, but I'm the one that has like the Juan Vargas on Instagram or on Twitter. So I guess I'm just joking.
There you go.
But excited to be here. Thank you so much for the opportunity.
Awesome. Yeah, for sure. And in the multifamily investing space, you are, like I said, the one and only. So it's a pleasure to finally have you in the show. Guys, if you aren't familiar yet with Juan, he is the founder of Genwealth Capital Group. So they're a multifamily investment company based in Texas, right? Based in Houston, and you have investments throughout the South and Southeast, Southwest, I guess, including Arizona, Georgia, Texas, so all the good places where everyone invests, right? So in short, he's been making moves, and I'm excited just to, have a conversation about how you got to where you were. I think I first came across you years and years ago when I think you were on a podcast also, perhaps. You were a guest on, and I'm blanking on which podcast that was, but this was like going back like 4 years or so. Maybe it was Adam Adams' podcast or Michael Blanc, one of those out there. And just incredible story how you really started, your first deal. And a lot of people think, how am I going to get into my first deal? And really, like, it's the law of the first deal, right? And then once that happens, it just goes from there.
You're right. Yeah. You have to just kind of break that barrier, right? And it could be challenging. There's multiple ways that it could be challenging, but, the law of the first deal, you're so right on that. And, once you kind of get over that hump, break that barrier, then, things do tend to get easier, right? You gain more confidence, you're in the know. And so things, start to fit like a puzzle after that.
So what was that first deal of yours that was the law? I mean, for those listeners who aren't familiar with this kind of phrase, the law of the first deal, it basically is, it's really hard, sometimes challenging, and sometimes can take a long time until you actually do your first real estate deal. But then once you do that first deal, the next deals come much faster right after. So that's kind of the law of the first deal. Once you get it done, the ball starts rolling, like a snowball, it catches up to you. So let's go back. Let's rewind, if you will, back to where you were before you found that first deal, and then how you got involved.
Yeah. So I was working full time. I was dabbled a little bit in single family rentals. And, luckily, and I say luckily now, but, it didn't feel so lucky at that time. But luckily for me, one of my single family rental, the tenant was a good tenant, but he ended up moving out. And so we struggled to get it leased for whatever reason. We marketed it, we thought we did the best that we could, but it still was vacant for a little bit. And during that time, we were the ones that had to pay for everything, right? So then I quickly realized, it's my fault for relying on one person, for rent. And, I should have known. And so that was the light bulb for me. That's all it took. And shortly after that, I reached out to owners directly. And my first deal was a 32 unit just outside of my hometown. And from there, was able to learn a ton and really, grow from that point. Right. So, but yeah, it was a 32 unit value add. It was owned by mom and pop, your classic, reno, low rents, that type of deal. Right. And so it was a good first investment. It was a good first deal. And, that really was the turning point for me and to get into larger deals.
How did you end up finding that deal, that first 32 unit? And did you do it on your own or was it with partners at the time?
Yeah. So I tried doing it on my own, but at that point, I didn't have enough resources. So I ended up bringing in another partner. So we did 50-50. And so, I did have a partner. He was a general contractor. And so he was actually the one that did, all the renovations and improvements. And so it was actually a good partnership. He tried to save as much as possible. And obviously you would know that he's going to try to do the best kind of quality work as well. And, I was more in charge of operations and management and oversight. But, we found that through direct mail. And, after I failed to get anything through brokers, and that was because of, I didn't have, prior experience in multifamily, just started to reach out to owners directly, either through phone calls, old school, just picking up the phone, or through direct mail. And that was just simply what I mean by that, just writing letters, like handwritten letters, and signing it and, sending them off, and, that's, I got a bunch of response, and, so it works actually. At the end of the year, closed on another smaller deal, and that was through, direct mail. And so it works, right? And these are personal deals, for the family. But, just wanting people to know out there that, if you're struggling to find, a larger deal, maybe settle for a smaller one. That smaller one, made us just as much money as some of these larger deals, right? So don't be afraid of the small ones, right? Because you can really, especially if it's like an ownership that, it's mom and pop, and, they really have not been up to date with the property.
Right.
Those are the ones that you want to go after. But yeah, that was the first deal.
Yeah. So, I mean, relatively speaking, a smaller deal because, 32 units for some people is like, whoa, that's huge. How could I take down a 32 unit property? But at the same time, when you're dealing with, 100, 200 plus unit apartment complex, there's also a lot more competition. You're dealing with large, companies, large institutional players who are looking at those larger deals. And oftentimes, almost always, you won't be able to find a deal like that except through a broker. Most of those are, the brokers are trying to find every single property out there.
And that's a good point. And one of the reasons why I was able to find this deal and actually, transact on it was because the sellers were, looking to save, quote unquote, save a broker fee, right? So in their eyes, like if they want, X amount, and then they have to subtract a broker's commission, then they're netting, Y, right? And so, and for us, it's like, hey, we're going to offer you X, today, right? And so, on the larger deals, of course, there's going to be a broker commission fee, but, I think it's well worth it if you're a seller, right? Because those guys are they know what they're doing. They can maximize the price for you. So
sure. Are you finding, and you said you closed another smaller deal recently with that, letter direct mail. Are you finding that still works? I mean, that's still something that, are you as a seller or owner, I should say, as an owner, are you getting still like direct mail coming to you from people trying to buy the properties?
No, so we only have that one smaller deal, and we don't necessarily get any mail.
Gotcha.
unless they're sending to somewhere else that I'm not seeing. and all the larger deals, we don't get those direct mails. Larger deals, it's brokers that will reach out from time to time and just offering a broker opinion of value. But yes, I would say yes, it works. There's a couple other deals that we're actually in working on. There's phases, right? And it was through direct mail and it was through direct phone calls that, the relationship was, or I wouldn't say the relationship, but it was the rapport that was able to build, right?
Right.
And the trust, right? So, there's a couple of deals that we're working on that are smaller that would be, more for family. So yes, it definitely works. You got to have a system in place to be able to, launch and be consistent with.
That's amazing. So you mentioned that you have a couple smaller deals and other deals you're working on for your family, meaning as opposed to the other types of deals that you do typically are syndications, right? Where you're dealing with a lot of investors. On these smaller deals, you're not bringing on investors, correct? It's just for your own wealth preservation.
That is correct. Yeah. It's, obviously the syndications, those are fun. I enjoy doing those. And, but they also come with, more responsibility, right? Because you're raising, tens of millions of dollars. And so you have investor capital, at work, and you're responsible for it, which is great, right? And, the other side of it is that, there's potentially multiple partners that are involved, right?
Right.
So even though it's a larger deal, your percentage could be smaller, right? And so on some of these smaller deals, even though they are smaller, you're 100%, on it. And so, that 100% of a smaller deal can be larger, right? Sometimes. And so you hear people say, hey, I'd rather have a small piece of a watermelon versus, 100% of a grape, right? And that's very, very true. And I believe that that's why I do syndications and larger deals. But at the same time, there are some opportunities where the grapes are pretty large too.
Yeah.
So So don't be afraid of them is what I'm saying, right? Especially if it's, within a driving distance for oversight.
That's great. And so I assume that's what you're doing, right? You're focused more on the local properties, and you're in Houston, right? In the Houston area?
Correct. Mm-hmm.
So it's a huge growing market. There's a lot of potential out there. And I'm sure there are a lot of deals that wouldn't, kind of fly under the radar when you're talking about institutional and the larger players are looking at 100 plus units, right? Or, at least 80 plus units. So when you talk about the smaller type deals, like what size deals are you looking at there?
Yeah. So we're looking at anywhere from like 20 to 70 units, as a, personal side. Mm-hmm. And then, from like 75 to 100, where we don't necessarily look at that. Number one, because it's larger for us, right? It's just going to take more capital, more equity. And then they're a little too small for like syndication side, right? And so we're looking for a little bit more scale. Obviously 100 units and above it's good, but ideally, 150 units and above would be, the right size for syndication.
Yeah, for sure. And especially, in Texas, especially those growing markets like Austin and Dallas and Houston, where you own, these prices have just gone up so much over the past few years. And so the value of these properties, you're talking about 100 unit deal. That could be $30 million, right?
Yeah. Look, it's been crazy even here, as we said, through 2022, there's, interest rates that are increasing. And so, really what is happening out there is on some of the deals, not 100% across, but some of the deals, cap rates are expanding, to a point. But, because the interest rates are high, even on the consumer side, for buying a home, buying a house, mm-hmm. It's causing a lot of these, potential homeowners to, stay as a renter or, have to be a renter. And so that in itself is causing more rent growth and really, pricing, as you mentioned, going back to pricing, even though cap rates, could expand a little bit. Rent growth is at an all-time high, right? So it's really keeping the prices there to a point, right? But yeah, you're 100% right. Houston, Dallas, Austin, San Antonio. These are excellent markets to be in. And that's why we feel, fortunate to actually be here and be local to these markets.
Yeah, it's a huge advantage because people are coming from all over the country to buy in these markets because the rent growth and, the population growth, job growth, these are growing markets. You have people coming from California, from New York, everywhere trying to invest and own in these areas. So you have quite an advantage that you're local. And what are some of the advantages that you see being local to some of these markets?
Yeah. So every single one of these markets, I definitely consider them local because, like, for example, Dallas, I can fly there, drive there, right. San Antonio, Austin, I can fly there, drive there, being in Houston, and what I like about, Texas, specifically when it comes to multifamily is that we're a business friendly state, right? Mm-hmm. Our governor, our politics, it makes it to where, we attract more business and not just, your everyday, smaller company. We're talking about larger companies, coming into Houston, coming to Dallas, right. Coming into Austin, that make headline news all day long, right? And so, as a result of that, you're having population growth, right? As a result of that, you're having rent growth. And so it bodes well. It's a good formula for us in the multifamily space. And yes, we have a little bit of headwinds with the interest rate environment that's going on right now, a little bit of volatility there, but it can weather the storm and get on the other side, get through on the other side. I think, folks will be in a very, very good spot, coming in a couple of years, right? It's just multiple different, fundamentals here in Texas that make it very, very exciting.
So, I assume you're still pretty active in the acquisition phase. Regardless of, all the interest rate hikes that have been going on and things going on. Is that accurate? You've been in this space for, 5, 6, 7 years in the multifamily space. So you've seen the growth that has happened, the exponential growth that's happened over these years. What do you see now differently than has been in the past?
Well, I do see that here over the last, call it 6, 7, 8 months, there has been a little bit of a slowdown in the number of buyers. Let me rephrase that. Less buyers out there in the market looking, and it's because of the volatility, right? So your typical institutional investors, those guys are likely sitting on the sidelines. And so that's a good formula for guys like me, our groups like us, to where, hey, look, these guys, we don't have to compete with these guys because, it's tough to win deals against these guys, but that gives us the opportunity to go in there and, have the best advantages possible. And so that's one thing that we're seeing for sure. we're still seeing a little bit of a gap, between pricing, in terms of what a seller expects to get versus what a buyer is expecting to pay. There's still a little bit of a gap, but I think that gap is decreasing as time goes on. A lot of the sellers are starting to realize that, the pricing I could have gotten in 2021 is not reality anymore.
Right.
So I need to reset my expectation and, take into account the current environment and the current risk that, buyers can take on, because, as a side point, I mean, there's been a lot of retrades going on with lenders as well, right? So that's definitely a risk. But yeah, so, we are still actively pursuing opportunities. They're not as easily done, like they were last year, right? Where everybody was just throwing debt at you and everything was just making a lot of sense. Except for the cap rates, right? 3 caps, sub 3 caps that we were seeing there for a while. We just knew that was a recipe for disaster. It wasn't going to last. Yeah, it was not going to last. So a lot of crazy things going on in 2022.
Well, we'll see how it goes. I've seen, as you said, there has been a little bit of a slowdown in terms of the volume of transactions, but still people making deals, people looking for deals and making deals happen regardless, figuring out ways to do it, whether through creative financing or seller financing, or as I mentioned earlier, carrying the note, something like that, where you could just, assume the debt from the previous owner, which comes with its own risk, but right now it seemed like it could be a good option.
Definitely. Yeah. If you have the opportunity to be able to be creative in this environment, which I'm seeing that more and more as well, right? To where, owners are open to that. And really it's going to be, it's going to be your smaller deals where they're more open to that, because, those are deals where it's just a mom and pop, type of owner, and maybe they have long-term debt or they could be a little bit more creative or it's paid off, free and clear. But also in 2022, I mean, this is our last year for 100% bonus appreciation, right? And so it's one thing to understand for folks out there, right? To, yes, it's, you want to make sure that you're checking the box on any particular deal, but also if you can, and it checks the boxes for you, then don't be afraid to jump in, because, I mean, this is your last year for 100%, and next year is supposed to go to 80%. And more about that, right? And doing cost segregation studies and all that good stuff, right? But, yes, that's very, very beneficial for folks out there. And so I would say take advantage of it if a deal checks the boxes for you, and don't invest in a deal just for the sake of, getting tax benefits, right? It's got to make sense for you, right?
Sure.
100% first. And then that just an added bonus to it.
Absolutely. Yeah, no, I always say that. Make sure the deal works. Make sure the deal makes sense from all the other perspectives. And then, the icing on the cake is always the tax benefits that come along with it. Exactly.
100% agree.
So Juan, tell me, I mean, what's kind of what do you enjoy most about the real estate investing? I mean, what is it that has kept you in this space for so long?
I enjoy that every single day is different, right? Every single day is different. Like, for example, like we're both in the real estate space, in one way, shape, or form, right? But, here we are talking right today, via Zoom. I'm talking to Yona here today, right? And tomorrow, I'll be talking to, somebody else. But, it's always, different situations. And, it's not the same thing every single day, it just simply stated, right? So I enjoy that. I enjoy, getting out there and meeting people and putting deals together. I mean, it's fun. The excitement that you get, from the start to the end, it's really amazing. So yeah, it's just a lot of things that go on every single day that make it exciting. It's not the same thing. That would be pretty boring to me if it were. Yeah.
No, that's true. I mean, I think there's plenty of spaces out there, industries where you kind of have a change up of environment, but the real estate game is fun because, I mean, you're doing so many different things. You can be wearing so many different hats in the real estate game. I mean, from acquisitions to investor relations, to raising capital, to, the actual asset management. You're doing a lot of different things. Is there any one particular area that you enjoy of those that I listed more than anything else? Because I know you do a lot of everything.
Yeah, I do a lot of everything. You're right. I enjoy the investor relations and I enjoy the upfront with acquisitions. Those two are fun. Asset management, I enjoy it as well. But, if I had to pick one, I would say it's investor relations or, acquisitions. I mean, those are fun.
Yeah, keeps you busy. That's for sure. Keep the deals coming. Awesome. Well, Juan, I want to transition now. We call the final four. These are 4 questions I asked to all my guests. First one for you is, what is the worst job that you ever had?
I would say the worst job I ever had was my very first job, actually, and that was in Subway. I used to work at Subway, like the sandwich shop. I think I lasted like a week or so.
Oh, wow.
Yeah, maybe a couple of weeks, but that was my very first job, and it was fun, but just I just couldn't do it, so that's it.
Yeah. You weren't able to make the sandwiches.
I wasn't good at making sandwiches. That's what so to this day, I don't really eat sandwiches much.
Oh man. No, when you said Subway, I thought you meant like you were, the underground train.
Yeah.
That's great. No, we had Lawrence Laddie. Lawrence, he's a great friend. And he used to come to our Wednesday night virtual meetup every week. And he worked in the MTA, the subway in New York. Like literally, he was a train operator. And he would be calling in from his phone, operating trains, doing to our meetup. So, whenever I hear subway,
crazy.
Yeah, I was thinking.
Yeah. Well, I mean, if you're like in the Northeast, right? You live anywhere like near New York or whatever, right? I mean, that's what you would think. That's probably the first thing that comes to mind when you think of Subway, right? Not like the sandwich shop, right? Yeah.
Awesome. So second question, what's a book you've read that's given you a paradigm shift?
I mean, there's a ton of great books out there, and so it's hard to pick just one, right? Because many have really made an impact. But one of my favorite books out there, that's not your typical book that you would like hear, is The Slight Edge. And I don't remember the name of the author, but The Slight Edge. And it's just like doing something every single day, just, improving just 1%, improving an inch. And that could really, really eventually take you to new heights. And, there's a lot of awesome books out there. Yeah, but that was one that I read, several years ago that really made a pretty big impact. And I use that to really push myself every single day. When you don't feel like doing things, you do it anyway,
Yeah,
and you move 100%. Forward. Yeah.
No, that's awesome. So we'll make sure to put that in the show notes, The Slight Edge, and I just looked it up over here by Jeff Olson. So we'll put that into the show notes if anyone wants to check out The Slight Edge. Sounds like an interesting book, just kind of helping you push a little bit of edge, a little bit that pushing you to the next next level. Third question, and this you can take any which way you want, which is what's a skill or talent that you would like to learn?
I'll keep it simple. Golf. Golf. Like I took a couple classes and hired a coach, and I'm still pretty terrible at it. And it's just my swing. I will get up there and swing and a miss, and it's just like if you want to have fun with the buddies. Get out there. You have to learn golf, man. Like, just simply stated, right? You get invited, you can't just say, hey, no, I have other plans or I can't do it. You got to show up, right? And, you have to at least know how to swing. And so that's one thing I would say, just simply, just better at golf.
There you
that's
go.
What I would say. Yeah.
Okay. Well, good for you. Good luck at that. Actually, I played a little golf in high school. Actually, little known fact that I was on the high school golf team. Wasn't really great at it, but literally did not pick up a club for over 20 years until a few weeks ago, actually a couple of months ago, there was an event, a networking event at a golf course, at a golf, what do you call it? Like a clubhouse, whatever it was. Anyways, I went, and with a friend of mine who was going to the real estate networking event also, we decided, let's go, let's play some rounds, before the event. And I literally missed like every single swing. It was horrible. I was so bad. Yeah. I threw in the towel. I was like, okay, 5 holes. That's it. We're finished.
5. Yeah, no, that's exactly how I feel, right? Like whenever I get up there, I'm like, man, this is like, I don't want to hold you guys up. And it's like, there's people like behind us waiting. It's like, man, let's just get this thing moving. Right. And let's stop counting. Like, I'm not counting. I'm just hitting this thing. Right.
Just hit it.
Yeah. So it's fun. It's fun though.
It can be fun, right? Like any game, right? It's fun if you're good at it,
You're right. That couldn't be further from the truth. I mean, that's 100% right on.
Well, fourth and final question, Juan, what does success mean to you?
Yeah, success to me means having the freedom and the time and the ability, to have, flexibility just in life in general, right? To spend time with family, be able to, give back, so I think success, really it entails, it involves everything, right? Having good health, having, a good spiritual time and values and family. It's just the whole package, right? That's success.
Awesome. Yeah. Being well balanced, making sure that it's all coming together for the right purpose. So good for you. Keep it going. Wishing you much continued success in what you're doing with Genwealth Capital. It's amazing to see the journey that you've gone on over the past few years also. And pleasure to speak with you today. Where can our listeners find you or reach out to you if they want to?
Yeah, sure. No, thank you so much. Yeah, they can reach out and, just send me an email at juan@genwealthcapital.com, juan@genwealthcapital.com. Or, you can reach out to me, connect with me on LinkedIn, Facebook, or Twitter. And for Twitter, it's @the Juan Vargas is my Twitter handle. So happy to connect anywhere and reach out if you have any questions, or if I can assist in any way I can, I'll be happy to do so. And thank you so much for the opportunity, Jonas. It was fun and it was a pleasure.
The pleasure's all mine. This has been great. I appreciate you coming on the show. And to our listeners, thank you guys for joining once again, all the way until the end. Remember, the best advice comes only when you ask. Real quick, I have one question for you. Did you like this episode? If you did, I want to ask you a huge favor. See, the biggest thing that helps this podcast grow and that will spread this message to the whole world is that if you leave a review, a rating, and subscribe to the podcast. What that does is it basically tells the platforms that this podcast is out on is that you like my stuff and I'm doing something right. So take a few seconds out of your day, hit that subscribe button, leave a rating or review. I would be extremely grateful. Also, I want to hear from you guys. So I want to hear some feedback. If you have any questions for future episodes, please find me on LinkedIn. Send me a DM, a connection request, Yona Weiss, and I'd love to hear from you.